Well, hello, my friends, Chris Marcus here with you for Arcadia Economics, and a quick video this morning in what is been a volatile overnight session in the markets. A little quiet on the New York Open, although while I don't know for sure that today is the day that we will see some of these things repriced, I certainly think there's a decent probability or possibility that something like that could begin today. I hear a lot of rumors of different news conferences in Arizona, things like that. A lot of wild things that I've heard, although fortunately there's enough that is confirmable that we can stick to, which we'll dig into. And you're not seeing it on CNBC this current hour, but they were selling the panic yesterday pretty hard. None of it's gone away, and we'll take a quick look. First, I would like to thank Summa Silver for bringing us today's video, and Galen McNamara, I believe, will be joining me on the show to talk about the intersex of 1,699 grams per ton silver equivalent over 4.3 meters, including 9,989 grams per ton silver equivalent over 0.6 meters at their Hughes property in Tonopah, Nevada. So thank you, Galen. I appreciate you sponsoring this episode. We'll look forward to catching up next week. We will talk about gold and silver. As you can see here, we'll pull up the silver chart before we dig into the debt ceiling. It has gotten hit pretty hard so far. Let's take a look at the one-day chart here. As you see, or I'm sure you're probably already aware, fell off a cliff as it often does. So anyway, we'll dig into that later today. I have a feeling there may be more coverage. But just looking at the front of CNBC, much different tone in the news stories than a couple of hours ago. Now the VIX barely flat on the day. And I just watched these numbers here. Dow Jones up by 0.05%, S&P up by 0.00%, NASDAQ just slightly down, very close to even. And here you see Bitcoin tanking. Ethereum drops 11% because China had the decision overnight to crack down on the currencies, although nothing on the front here above the fold, as they say, about that debt ceiling thing that just yesterday they were reporting that Joe Biden has been warning government agencies about a potential shutdown, which would seem significant, especially with the debt ceiling now, I guess 6 days away, September 30th, October 1st. To scroll down, White House prepares for potential shutdown, which I don't know. A lot of people say that it's not that big of a deal, although why don't we look at what our so-called elected leaders actually say? Again, if you come over here in the politics section, it's in there, but doesn't seem like anything to be concerned about, at least is what CNBC, I don't know, I'm a viewer for entertainment. I don't really put too much stock in anything they say, but I actually look at what they're selling. And here, as House prepares for potential shutdown as leaders grapple with crucial deadlines, not affecting the Dow so far, which was down a bit before, but budget off. The administration's Office of Management and Budget is alerting federal agencies that barring a new appropriations bill, they are expected to execute shutdown plans next week. I would think that would impact the economy because, well, actually, let's just cut right to the chase. Here are 6 former Treasury secretaries: Hank Paulson of Goldman Sachs, Tim Geithner of IRS fame, Larry Summers, Jacob Lew, Robert Rubin, Blumenthal. And they're talking here about even a short-lived default could threaten economic growth. It creates the risk of roiling markets and sapping economic confidence and would prevent Americans from receiving vital services. Short of actual default, even delaying resolution under default until default is imminent can be detrimental. So here's Hank Paulson of Goldman Sachs. He was running it, even delaying it, and now nothing has happened since they warned yesterday. And of course, as we have been learning, wait, no, not that one. here they were, okay, administration's office is alerting federal agencies. Okay, when did they do that? Was that earlier? Is Congress going to be negotiating this all throughout the weekend? Will Nancy Pelosi be using her political gravitas and people skills to make sure this gets done? Is Janet Yellen up to the task? When I took a trip to Washington earlier year, she wasn't even in the Treasury, so who knows where she is. But anyway, here you see that these economic experts are saying even delaying it can be detrimental. So you would think that since nothing has been resolved this morning, at least that I've seen, that's a delay of another day. So I don't see the urgency on the front page of the headlines, but what to know about possible economic fallout? That doesn't sound good. Office of Management and Budget taking steps to let department and agency leaders know that barring new provision, they're expected to execute shutdown plans. Fortunately, CNBC, at least on the cover, is not going out of their way to let their readers know, but that's why I got you covered. Let's just scroll to the bottom of this. What debt ceiling woes could mean for Social Security benefits? Well, that sounds serious. If they're going to continue stealing money from retirement funds, like Janet Yellen acknowledged that she did here, because after the debt limit was reinstated on August 1st, Treasury began employing certain extraordinary measures to continue to finance the government on a temporary basis. These measures, which are authorized by some law that I never voted for, hey, on me, I'll take accountability, have been used previously, including a suspension of certain investments in the Civil Service Retirement and Disability Fund, Postal Service benefits. So basically, they're looting these guys. Once all available measures and cash on hand are fully exhausted, the U.S. would be unable to meet its obligations for the first time in our history. Well, certainly someone who's running the Federal Reserve and the Treasury should be able to calculate some idea of when. And if you're really serving your constituents, tell them. Our estimates of the period that extraordinary measures will last have been refined in recent weeks, although they continue to be subject. September 15th. She said September 15th. And what happened on September 15th? Well, I didn't mention anything about that, but they did have this bizarre press conference with her, Janet Yellen, and Kamala Harris. All of a sudden, they're concerned about childcare system is overburdened. Maybe they don't have enough money to fund it. Maybe the federal employees retirement system thrift savings plan that doesn't get paid $7 million a speech or whatever it is Janet Yellen gets, maybe they were tapped out. And here, interesting, she also mentions shortages due to inadequate supply of printed money, of that office order silver for their silverware, or who knows. Long report. Right after the close of trading, it was bizarre. I did watch the press conference. So anyway, money runs out September 15th. But what the debt ceiling woes could mean for Social Security benefits, I'll read that one later. Sounds interesting. But moderate and progressive Democrats have clashed over the size and scope of the package. Neither Pelosi nor Schumer clarified whether the negotiators had made decisions whittling down their options for financing the bill, or were simply in agreement over which of the many options they are collectively willing to consider. Wow. Well, let's just hope that gets resolved. Okay, what happens to Social Security? Suggested this week that Social Security benefits will be impacted if Congress doesn't raise or suspend the debt ceiling. What? The program's fund that it uses to pay the benefits will likely not face the long-term consequences. However, there is a possibility that monthly checks could be delayed. So now that they've taken basically whatever they can get from these funds, now she's threatening to go take your Social Security money. Now, obviously I've not gone to law school, but at least I would examine if there is treason occurring here, because especially Federal Reserve, Treasury, she swore those oaths. She took on the positions. I don't believe anyone forced her. I mean, well, I'm aware of. So anyway, then you have 6 former Secretary Treasuries urge Congress. Wait, look at me getting ahead of myself, because this was September 22nd. Let's not forget that after the 15th, Here's Janet Yellen. She had time to write an op-ed for the Wall Street Journal. Wow. Getting a lot done, always paid its bill on time. The U.S. has never defaulted. Well, I'm not so sure anymore because I got this link this morning, which I just read through briefly. You saying the U.S. government has previously defaulted. It's not risk-free. Now, I know you're going to think I'm making this up because I like silver so much, but look at December of 1979 into 1980, right around when silver was going to $50 for the first time. As you've heard me say before, had the COMEX and CFTC not exposed their true colors for perhaps the first, or I don't know, maybe 10th time by then, I would be willing to wager a fair amount of post-reset price silver that the price would have gone well higher than $50. So maybe that, in either case, had something to do with what this author is asserting here, that the government has previously defaulted, which of course would invalidate what financial expert Janet Yellen is saying here, has always paid its bills on time. That's clearly not true. US has never defaulted. I don't think that's true either. We would emerge from the crisis a permanently weaker nation. Well, we emerged from the subprime crisis as a permanently weaker nation when we were getting ready to have Janet Yellen become Fed chairwoman and then Treasury secretary. I wonder if she knows this woman. They seem like they might have a bit in common, but we won't get into the politics today. Want to keep this one short, but again here, Six warned House Speaker Nancy Pelosi that even flirting with the first ever U.S. default could spook markets and raise concerns about the country's credit. Well, I mean, maybe I'm not understanding something, but where is if the office, the administration, I'm assuming they're talking about the Biden administration. So if the Biden administration's Office of Management and Budget is taking steps to let debt and agency leaders know that, barring a new appropriations bill, which some Democrats are even voting against, like Joe Manchin, at least what I read on CNBC, they are expected to execute shutdown plans starting late next week. So is that flirting yet? I mean, that's more than like asking for the phone number. I mean, they called him and told him, be ready to go home. So Nancy Pelosi, even flirting with the first ever, could spook markets and raise concerns. Let's see if CNBC is picking up any market concerns. No, still up just 0.09 on the Dow. Down 17 cents, but a negative even on the S&P. Let's look at the bond market. Wowers. Oh, look at Japan. They went from 0.0, is that 0.61, and it's up 0.3. That's quite a jump. Now, I saw this before I went to sleep because I was thinking 1.456. Wasn't it in the 1.3 range just quite recently? And you can see, let's take a look at the 5-day chart. Get the, because here we are in the 22nd, opened, right, 131, we'll call it, down to 1.30. So that's the 22nd. Today's the 24th. So that means that the 10-year Treasury yield is up 15 basis points, which, as yields in fixed income move inversely to price, in other words, investors are fleeing the U.S. bond market as we speak. But let's take a look at the 1-day chart, because this is interesting too. Now, fortunately, there we go. All right, let's look at the 1-day chart. I'll see if I can get this to happen. It's kind of not the easiest chart to use. Sometimes, there we go. Not showing up yet, but sometimes I'll see a flash spike after you load it for a second. It appeared on another chart that I tweeted. You can check the Arcadia economic. There's no S at the end of that one. Didn't fit. But there was a flash spike there. In either case, whether you can see it on that chart or not, certainly you see it there. Up to 1.45. That's 4 basis points, 4.3 basis points just today alone. Let's see the Japanese chart, because this sounds pretty wild. So 5-day chart, here we were. Their yield was 0.0. So their yield has doubled, really tripled from 10 a.m. on Wednesday. So the yield, the 10-year Treasury yield in Japan was yielding 2.6 basis points on Wednesday, and now that's inverted to 6.2, so slightly under a triple. Interesting if you look at the markets. This, hey, come back here. So let's see, if we look at Asia, see the Nikkei was up 2%. These other ones relatively flat, but a lot happening in China. I hear a lot of liquidity being injected. Evergrande not sounding good. It's amazing here. It's like they've forgotten about that Evergrande story, which seems like one of the largest real estate companies in history missed some payments this week. Although that is tucked down in here, leaving investors in limbo. That's why reading CNBC, unless you're trained to really read through this stuff, I don't consider sufficient. So I'm going to fill in. Evergrande was due to pay $83 million of interest on Thursday. That's set to mature. I guess they didn't follow up on this. I hear that there's some payments were missed on Thursday. I checked other sources. I have not been to Evergrande's office, but anyway, as you see, a lot happening. Social Security, if these guys don't get it all together, hopefully Nancy or Yellen and Nancy will finish up the childcare thing. These Treasury secretaries. Warning from some of the nation's top economists joining a growing chorus of public and private sector voices that say failure to address the limit could push the American economy into another economic downturn. And I would add that no matter what happens, whether they define as address or fix, we had this kind of thing back in 2011. S&P downgraded the U.S. Treasury credit rating, and gold over that month went from 1,600 to 1,900. So just imagine if it went up $300 over the next month. Who knows what would happen to silver? So anyway, we'll keep an eye on it because, again, even delaying resolution, even flirting with it could be detrimental. And it has happened before, despite some of the headlines that you might read. And again, just so we're not cherry picking, debt ceiling catastrophe. Economists warn of catastrophe. Debt ceiling gambit. Stay calm and carry on. If you think Joe Biden will be able to guide Nancy Pelosi and Janet Yellen through it, Senator John Tester is expressing frustration, warnings of economic catastrophe. So if people are warning, including Janet Yellen, that must mean that they're at least flirting with trouble now. Of course, here, debt ceiling suspension, as Goldman warns of a shutdown collision course. I can only imagine what Alexandra Ocasio-Cortez would say. And last one before we wrap this up here. I know I've been saying, I wonder if the Fed actually started tapering on the 15th because they're running out of childcare money. Saw another headline saying federal stimulus measures reduced. I don't know for sure. I've been trying to check their own website to get the updated data on the Fed's balance sheet. Although here we are, even on September 24th, I don't know, maybe the Fed's computer went down again, but still, for some reason, the world's steward of the world's reserve currency don't have any updated data, so I don't know if it went up or down yet. But fortunately, as we wrap up, again, I appreciate Galen of Summa Silver, who comes on the show, answers questions. If you have a question you'd like to find out or have your financial advisor get more information to see whether investing in silver miners in front of a debt ceiling catastrophe could be the right thing for you, this is the way to do it. 604-288-8004. And again, we will have Galen. Hopefully we'll get better internet connection by then so we could do some live questions along with video. But anyway, with that said, I sure appreciate you being here. Hope you're having a good day. I think it's going to be a fun one. Again, as a silver investor, I find myself on days like this thinking, all right, is it finally going to see something happen? And it may. Also, a good time to take a walk outside. If it's not today, but I mean, these are the things that are happening. It sure looks like they're panicking pretty hard on that debt ceiling. And we'll see what else happens. But I will be joining you back either way, whether today, maybe take the weekend off, break a little bit. But I'm feeling we'll have more coming today. And you stay well out there.